All right, hello and welcome everyone for joining us tonight for our session. Let's talk about the power of AI in crypto with Marsh. Um, I'm going to go through a few quick things and then we're going to jump right into the AMA. So for those of you that are maybe new to the community, All Things Blockchain is a non-profit association that I founded in November 2020. And the whole vision of it was to create a community for the community by the community. So we have lots of sponsors that make this possible. And we host a lot of in real life events in Queensland. And we've started to do a lot more online events, such as this one. And we will keep doing more and building on them throughout 2025. We also have some collaboration partners. So if there's anybody out there that has other types of communities like Wave of Innovation, Women in Digital Economy, Australian Crypto Convention, which I actually just got back from. It was an amazing weekend, epic vibes down there. So we like to partner with other communities. So if anybody out there is interested in partnering with us, please reach out to us. I can't do it without my team. So my name is Danielle Marie. I'm actually not the chairperson anymore. We'll have to update Matt. We have to update this slide. Matt Hooper is also on the call, is actually recently taken over as chairperson, and I am the treasurer. But yes, as I mentioned, I founded it in 2020. I wear multiple different hats in this space, from being an educator to community builder, and recently started contracting myself out to different organizations and just secured a 3-month contract where I'll be going around to all of the major conferences and organizing events, hence why Matt is going to be taking over more of the lead as the community manager and chairperson moving forward. We're always looking for volunteers, anybody that is based in Brisbane, or even if they want to help with any of the online stuff and want to get more involved and just kind of help us with our mission of growing the community, please reach out to us. All right, we have our end of year Christmas party. We normally live stream, or we have been live streaming our events previously. This one won't be live streamed because there's no presentations or panels or anything. It's literally just to get everybody in the room together, end of year, come down. We've partnered with DECA, which was formerly Blockchain Australia, so the Digital Economy Council of Australia, just to bring everyone together. So anybody that is, in Queensland, Brisbane, Sunshine Coast, Gold Coast, we invite you to come down and join us for and meet people in the community and have some end of year drinks. We recently started. Okay, sorry, I saw people in the chat. We recently launched our community hub. We launched it in September. And so what we decided to do, because we noticed a lot of people were doing newsletters, we send out what are all of the upcoming events that are coming, and we look in Australia and globally. And then what we do is we also share some of the recordings. So like this recording will be shared in there. We had an event earlier this month, that recording with Hashlock, which is a Web3 security auditing firm. We'll put that recording in there. And then if we find any others, like say if Mark from Oz DeFi does a video, we'll put that in there, so that you kind of have this one like kind of community resource of how you can kind of tap into online events, in-person events all across Australia. So go ahead and sign up for that. And the last thing is we need help to grow the community. This year, our focus was to try to start growing more online. As I said, we've been a nonprofit based in Queensland, primarily in real life events. But this year we started to kind of focus on going more online, and same with next year and growing our community. So if you want to follow us on your platform of choice, whether it's Telegram or LinkedIn, or not Telegram, Twitter, X, whatever you want to call it, please give us a follow. We would much appreciate it. So that is it for me. Now let's jump into the main event, where we have Marsh, the CEO of AI Wealth Pro. Sorry, I'm losing my voice and my mind after a long weekend at a conference. He's got over 15 years of experience as an entrepreneur. He's built and scaled multiple successful businesses, leading them to profitable exits. So he's got an extensive experience in venture capital, and has this allowed him to kind of the support to invest in tech startups and guiding them through kind of growth through innovation. And he is also an advisor and a board member of Liquid Crypto Australia. I want to know a little bit more about that. Being based here in Australia, I don't think I've heard of them. And he possesses a deep understanding of blockchain and the crypto landscape. So thank you so much for joining us, Mark. To jump right into it, before we get into all of the questions that I pre-organized, I want to just let everybody know I like to keep these quite engaging. So if you have a question, please put it in the chat as we go along. Happy for you to type it. Happy for you to put your hand up and then even unmute yourself and get in and answer your questions. But I will start off by, Mark, can you just give us a little bit more background? I've given a high level background, but more about how you got into crypto, and then what kind of motivated you to start AI Wealth Pro?
Okay. So we got into crypto, as in we, Lisa, my wife and myself, probably 4 or 5 years ago. We started exploring that space, just saw the potential with alternatives to the traditional banking system and the technology around crypto, and how the forecast really looked for the industry moving forward, with decentralized markets, centralized markets, and the digital economy. So that kind of sparked the initial interest, and that then went on to a pathway of tech startups in different flavors, but all kind of Web3 crypto spaces that were created by smart people doing interesting things with interesting ideas that really captured some attention. That's how it all really started back in the beginning. And we moved to Dubai a bit over 2 years ago from Australia. We were living in Sydney for 5 years prior to that. Well, I was in Sydney for 5 years. Moving to Dubai in that space, basically started meeting some interesting, exciting people, new ideas. And not long after we got here, we were at an event in Dubai. There was an open mic session where creators of new businesses had a captive VC kind of audience in front of them, and they had a 2-minute time cap where they could get up, talk about their business, why they were different, who they were, and all that type of thing. During this event is when I came across the CTO of the business, VJ. VJ has a PhD in finance from a Swiss business school. He was a futures trader for 10 years. And he had a vision in 2017 when AI was starting to kick off, to use that technology to make his life as a futures trader easier and with better rewards. So in 2017, he set up an AI platform to machine learn off his manual trading. So that's the first big difference. We're not just a trading bot. It doesn't follow a simple algorithm to give a result following some instructions. This is actually a machine-taught AI from 2017, which was learning right through until 2020. And in 2020, the technology was good enough that it could trade by itself off the rules that had been taught by our CTO. So when I dropped into the equation, the CTO had this awesome technology, which he really didn't know how to monetize too well or scale the business. He was good at what he did, and that was, he's a mathematician and he's a trader. So then we partnered up, and we've grown the business out significantly since then. We've got about 519 users, about $18.5 million US in accounts, and our trading volume is just shy of $90 million per month. The business has grown to that level with no marketing. It's grown purely off referrals, friends or family. And when we first started reaching out to VC communities we knew, to try it and then bring it out to their communities. And it's just been a model that's worked because it's self-custody. Clients don't hand over their money in that volatile space where you can get rugged, and our performance has been good. So people have been okay to share it with their colleagues or friends, and we've grown out. So that's how basically we came into AI Wealth Pro. Just got introduced to the solution, saw an opportunity and added some value, and then grown the business out in Dubai since then.
Well, amazing. I was actually just in Sydney for the Australian Crypto Convention, and I'll be back in Dubai in a couple of weeks, so we'll have to catch up in person. Coming from Bitcoin Mina, we can have a separate
Oh,
conversation
cool.
about that. We've going to be hosting a couple events. All right. Well, thanks for that background and the overall. Now, you mentioned something about being self-custody and not getting rugged. And so if you can kind of tell us, like, was that a little bit of the mission, or what is the mission of AI Wealth Pro? Is it to kind of make it a safer place? Because a lot of the times, there's not only trading one, is hard, and they always say most people lose money from trading. And then the second is people will hand over to these trading platforms that say, "Oh no, give us your money, we'll trade for you, and you'll get a certain kind of percentage." But then you have that risk of, are they just going to scam you and not actually give you your money and get rugged? So is that the main thing that sets you guys apart? And is that why you're
Yeah,
so
exactly.
invested?
So 98% of traders fail. They might have a few short-term wins, but to be a long-term successful trader, the stats are 98% will be upside down in their trades. Um, in the crypto space, it's very easy for people to hide behind companies and illusions of companies to steal people's money. This happened so many times before. Hand over your money of X amount and we'll guarantee you a return of 30% a month every month. As soon as somebody says that, that's the biggest red flag. Turn around, run, don't hand over any money. I'm sure there are some companies that do that are successful, but the majority aren't that case, unfortunately, in this space. So having a product which is full self-custodial, so the client always holds the money in their account on their exchange, is super important in this space. With time, regulations in the crypto space and exchanges will become potentially regulated and the rules will be a lot more tight, and that opinion or strategy may change. But until then, clients need to be very careful, especially when you're dealing with seven-figure accounts, large accounts. So the money's always in the client's account. They have full control. They can transfer it out at any time. We simply connect to their account through 5 API keys. Our artificial intelligence lives on servers in Germany, ground-based servers, and there's reasons we do that. The biggest reason is cybersecurity. They live actually in exchanges which are used for crypto mining because the security around crypto mining is high. We don't crypto mine. We don't Bitcoin mine, but we put it in that house purely because of the security around it, because we can't, any threats that I can identify, we've got to mitigate it somehow. So the threat of being attacked, we mitigate it by putting it into that safe space as opposed to a cloud-based server, which opens up that vulnerability. It's expensive. It's expensive to buy those servers. It's expensive to run them, but for the long-term security for our clients, it's essential. It's also fast. We can enter and exit trades fast as opposed to a cloud-based exchange. But the ultimate facts are that having the clients having the keys to their balance is a strategic direction that I decided to take from the early on. We have had opportunities to stray from that path, and it can happen, but it's something we don't want to do. We just want to keep the basics and the fundamentals of what we're doing intact and keep the funds securely in the actual client's account themselves.
Okay, can you give us an example when you're saying like the security and for the clients? So can the hackers get into their exchange accounts? Like what are some of the risks
So
that
the
you
worst,
guys?
so the worst case scenario is a hacker, if they would obtain access to the AI, would send rogue signals to the account. They can't withdraw from the account even if they had control of it, because the API keys that we set up just allow, when we set up the API key, there's certain instructions that each key can do, and it's basically trade. It can't withdraw or transfer money. So the worst thing that it could happen, in the unlikely event that it was to ever happen one day, is it would send a rogue signal through for some crazy trade, but they can't steal the funds. The
And
likelihood of that,
what benefit does that give the hacker?
there is no real benefit
Okay.
other
Okay.
than being destructive.
Okay. All right. All right.
There's no financial gain for them in that scenario.
Mm,
Yeah.
unless maybe they were trying to
So
make.
that's purely the reason around the security. It's just to put a big wall around the fence, around the property, just to prevent a hacker getting in and sending rogue signals. And as I say, if they did, they can't transfer money. All they can do is send a rogue signal until it's taken control of again, and that's cancelled off.
Okay, cool. And you said that and now are they what kind of exchanges? Are they centralized? Can you do it with a decentralized exchange? Like what are your options?
Because of the numbers that our accounts are up to now in our trading volume, it's getting up to a significant number. We need to be on exchanges which have decent liquidity. So the two exchanges that we're dealing with at the moment are both Binance and Bybit, the two largest exchanges. We've tried Kraken for our American clients. However, it failed having enough liquidity for our trading sizes. So we're dealing with Binance and Bybit. We will add another one in the future as liquidity on other exchanges increase. And the pairs that we trade are Bitcoin, Solana, Ethereum, Litecoin, and Bitcoin, Litecoin, Solana, and Ethereum 4. And the reason we choose those 4 is because of the amount of liquidity, and there's a fast correlation to any BTC movement. That's something that our AI looks at. When BTC moves, it's cross-checking that they move as well, because they always do. And if there's a lag, there may be a trading opportunity. So we're looking for the liquidity in those 2 biggest exchanges, plus those 4 biggest trading pairs is what we trade on and what we trade with.
Okay, and I have so many questions, and I'm sure the audience does as well. But with
No
the,
problem.
I was chatting with somebody, I can't remember who. I spoke with hundreds of people this weekend. But do you see like AI making it obviously learning from itself and being able to kind of like better than humans, like you said, like 98% of people, fail. That's how the exchanges make their money. So like, do you see exchanges banning people from using API keys that are using AI?
Very,
Like
very good. Very good question. So there's 2 questions there. The first one, trading on an exchange, and this was explained to me this way by our CTO. And the reason why we have 5 API keys and not 1. We can get away with what we're trying to do technically with 1, but we have 5. When I said to VJ initially, VJ, why do we have 5 API keys? We can get away with 1. He said, well, Mark, when you trade on an exchange, it's like going to the casino. The casino wants you to win a little bit of money, but not too much. If you go to the casino and constantly win money, they're going to kick you out of the casino, or they're going to make your life hard. Exchanges are exactly the same. They want you to win a little bit of money, but if you're successful constantly, they'll either kick you out or they'll make your life hard. So the exchanges actually have AI that roam around, and they're looking at API keys to check how successful these keys are, or financially strong they are for the client. And if you're strong, that's how they find it out. But what we actually did was we created 5 API keys, and each API key does something different. One will, as an example, enter a long position. One will close a long position. One will enter a short, close a short. And the 5th will look at the dashboard balance to work out the client's balance. So at the end of the month, we can work out the delta between the starting balance and the ending balance and issue them an invoice. So then what we do is, on a random time delay, each API changes on what it does. So the key that was opening a long position in a week's time might be closing a short. And in a month's time after that, just random time, it might be doing a dashboard balance. So it's like having a 5-code combination for your pockets off your bike. It's constantly changing, but that's only designed to confuse the exchanges and draw the heat away from us for having a successful key. So we're averaging 24.222% per month average returns for the last 2 years. And the reason we don't draw attention to ourselves from the exchanges and get into trouble is this random time lock code API event, which is the first question. How do we get around that? Well, that's what we do. And nobody else that I'm aware of uses that technology, which was quite complicated to design, but it works for us quite well now. The first part of your question about how good AI can get, and it does machine learn, it can learn from its mistakes and its results. In this trading space, it might be a while away, but I still think it's a fusion of AI and human for the best results. And that's actually what we do with our product, because we're not a simple bot that just follows an algorithm to get a result. The AI is really good at crunching data and giving possible scenarios from what it's learned and giving a solution. Giving the data for going back 6 years worth of data, it's predicting, so it looks back 6 years with the technical data, then it forecasts 3 months ahead. It's looking for correlations, and then it comes up with a possible scenario for a trade. it presents that trade to our CTO to approve it or deny it, or modify it. And this is the crucial bit, which AI can't do at this stage. It then gives it back to the human to say, well, I think Israel might be firing a missile at somebody, or there's a US election happening and there's a Fed cut after that US election. So there's these other fundamental factors on top of the technical, which the AI won't know, which we can then infuse for the final part of the trade to ensure that we've got the best possible chance for success
Mm.
with what we're doing, because it just doesn't know that. So AI in the future may get better, and I'm sure it will, but with what we have now, this is the best possible solution. It's 80, 90, well, I'd call it maybe 90% AI, do all the hard labor, present solutions, and then the human that knows what they're doing has the final say.
Okay. Well, you touched on one of the things because I was going to say, what about those fundamentals, like things, happening and I wonder if in due time, like you said, it gets better. Like even now, like compared to when I very first started using ChatGPT, it now searches the internet for me rather than, a year ago it couldn't search the internet. So like it is definitely evolving, but even like I don't even know how I would live without ChatGPT because it does like it gets whatever I want to write or whatever I'm doing, it gets me 80%, and then I need to go in and and get it to exactly where I need it to be. So now I think I had another question. Oh, you were saying, okay, so it gets it to the 90% mark, and then you're saying your CTO or the human element. Now, does he basically um approve every trade and then that gets pushed out to all of your clients, or like how does that work? Like how
No,
does
yes,
do
because
the
we've
clients
got
have to
over five. Yeah, because we've got over 500 accounts now, he will approve a concept. So the AI will forecast it for the next 3 months. At the moment, it thinks its positions are going long, so it's going to come up with a few scenarios. We at this stage we're really bullish on Solana USDT pair. So we're looking for the right entry point. So once it's approved by the CTO for up to 3 months ahead for different trade points, that information then once the AI's got it, it takes it back to the exchange in Germany. Actually, I'll take a step back. How the process works is so AI lives on the exchange in Germany, and the AI will then, through API, connect to the marketplace on either Binance or Bybit. And you can see what the market's doing. That's how it does its data analysis. And it's for every order, there's a buyer and a seller, and it's looking at that data. It brings that information back to the exchange. Once it's approved, the CTO might approve the AI's decision to enter a long position with Solana under certain conditions after a dip in the market to confirm directional change. The AI then, from each of our 500 plus accounts, those 5 API keys, it sends signals to from everyone's account, from that AI to the account, to the marketplace to do the trade. That's all completely AI driven. And that's so the concept is, or the decision's made by the CTO. Once it's approved, it's fully managed. The hedges are managed. The take profits head is managed. It's all done by the AI or the heavy lifting.
That was going to be my next question. I'm not even reading my questions off of the sheet. I'll come back to those. But I'm not a trader, and I met this guy at the conference, and I told him he was a trader and like poker player, and like saying how they've made all this money and in crypto, and doing leverage trading, and he was like, go and do a leverage trade. He goes, not too much, 5x, that should be enough, quite conservative. And then you can do quite well. And he was actually bullish on Solana. But how does it work? Like, like you said, it figures all of that out, or like, does it look at like the clients? Okay, well, this client has 10 grand and we're gonna have these trades, and it figures out the leverage, or do you set that like as the client, like, hey, I'm comfortable with the 3x leverage, or I want to go really high risk and do 10x? Like, who kind of controls the leverage position?
Yeah. So the maximum leverage that we'll do on any trade is 10. So it's normally between 3 or 10. And the leverage is generally determined by the AI and approved by the CTO. And the increasing leverage is really determined by how sure the outcome will be. Example, if it was more of a sideways choppy market and where it could really go either way. We'll turn the leverage down a little bit, and we'll turn also the position size entry down a little bit. We always on the side of more on the side of caution. Once we've really got confirmed momentum and new highs and new low lows, and we've got a directional change coupled with fundamental factors, that's when we'll turn it up to a maximum of 10. So then that's approved from the CTO level after recommendation from the AI. And then it doesn't matter if you've got $1,000 in an account or our highest account being $4.8 million, the logic's the same. The AI will just do its job.
Okay, and then what about stop losses? Does it set stop losses and then can it, like move the stop loss up for you, like once you're in like a profit and like in a certain position, or do you have to do that manually?
We don't have stop losses. That sounds scary, but we don't have stop losses because we're not a normal trading algorithm. We're a hedge trading platform, so we hedge our bets if required. So example being, we do have a silent stop loss, which I'll get to in a second. But we hedge trade. So if we were going to open a position right now, the price on Solana is $255.40. So if we entered a long position at $255 for Solana, and it went into a long position, that's the only trade it would have open. Yep, it gets to about 20-25%. We take profit, the trade finishes. That was an easy deal. If we open that same trade with Solana at $255, the market increases, then it reversed and it went into a negative position. That's an unrealized loss position. It's unrealized because the trade's still open. Once it gets to a certain percentage in a negative loss position, our hedging kicks in. And the first thing the AI will do is it'll open an opposing direction trade. So we do cross margin, so one can cancel the other one out. And it's an insurance policy. So as the market continues in the wrong direction, that second trade starts to make more and more money because it's that direction's trade, and it counts as the first trade. If it was worst case scenario, it was to keep decreasing in the wrong direction, we keep increasing our position size with the hedge to balance out the first trade. Then eventually we start to close those hedges out when it reverses back again until it takes into a long position, and we take profit. So traditionally, getting a little bit off, a bit detailed a bit, traditionally hedge trading was for like Forex markets, FX markets, and they were manually done by humans. A Forex market operates for like 8 or 9 hours a day. It's closed on weekends. Those type of markets have high fees, high interest to keep trades open, coupled with only being the markets being on for a third of the day. They need stop losses in that trading environment because it gets too expensive for them, especially if a market shifts significantly to keep the trade open. In a crypto market, we can trade 24 hours a day, 7 days a week, 365 days a year because it's a 24-hour market. That coupled with really low fees to keep a trade open allows us to keep a trade open, not require a stop loss, and just hedge our way in and out of trade. So a trade might be open for 2 days, or it might be open 3 or 4 weeks. But we know once we close that trade through hedging, we'll be in a successful position. That was a bit of a long answer about a stop loss, and we don't have it. I did say there was a silent stop loss, and what that is if a market crashes really fast, and the prices go down fast and it skips past entry points, the AI will send a signal which hasn't been loaded onto the client's exchange to enter a stop loss position and just close off the trade if required. But that's more of an opposing hedge position as well. But that's purely a backup position in case there's a market crash and the hedges don't kick in time.
Sounds like you guys have really, I think you said you're like a mathematician, and like it sounds like you guys have really
There's
thought
so
of,
much work, and I'm just touching the surface. The amount of
yeah.
calculation going in the back is crazy.
Well, it's one of the reasons why I've tried, like, actually many years ago, before I got into crypto, I tried doing Forex trading because, like most people trying to find ways to, make more money, and, you get the shiny, like, oh, look, and I wasn't very good at it. I tried, but during that process, like, I learned a lot of the terminology and, and the frameworks and things, but I've never managed to crack the code of becoming a good trader, and nor do I really have the time or kind of the emotions for it. So I think something like this maybe could be something I would be interested in. That's why when I was chatting with Lisa, I was like, "Ooh, I want to learn more." Just a reminder to the audience, please, if you have questions, put them in the chat, put your hand up. More than welcome to take questions. Um, w- where do you see, we already kind of touched on it a little bit, but like where do you see AI shaping like the future of the crypto industry? And also like where do you see some of the, challenges of AI being able to kind of help us overcome, the crypto trading and, people losing 98% of the time if they're not using AI.
Yeah. It's such a hard space and a hard because the technology just is advancing so fast. It's purely up to whatever you can come up with your mind and perceive. Definitely, it's just going to get better and better with what we can and can't do. Definitely for the near future, the human involvement for that overall decision making will be super important. Again, with time, when it can scan the news and build bigger pictures and get its own fundamentals and integrate that with the technical, that may change. But the pure fact that it can just crunch so much data emotionless, whether it's $1 or $1 million account, come up with the same decision 24 hours a day, 7 days a week, constantly without fatigue or errors. That's the stuff that's really, really priceless. And
Mhm.
it does really change the framework for trading, especially in a 24-hour market like crypto. Like if you're in other equity markets or FX markets, whether they're sleeping for 2/3 of the day or turned off, it's really wasted time. It's wasted time for the technology because it doesn't get tired, it doesn't get fatigued. You need to be using this technology in a space that can operate for those times. We are testing with AI Wealth Pro at the moment, FX markets and equity markets. FX markets have been almost being tested for a year, but all those limitations that we just mentioned really put limits on the system. So at the moment, we're averaging 24 point, I think it's 22% was the last number of our monthly average. But in the FX markets, we're averaging 6% per month returns, purely because of the limitations that in a human system, once you put the AI in there, because it's off the majority of the time. So it really does show it's exactly the same technology, just using different environments, how much
Mhm.
more effective it can be when it's just turned on, especially for the long-term future. And the big picture, well, people become more used to using it, more familiar and more open to, I guess, using that technology and giving it more, I don't know, respect and relying on it a lot more. And it won't be just for obviously trading, it'll be for writing emails, it'll be designing buildings, it'll be for doing everything in life.
Mm. Yeah. And do you guys see like in the future, like, I love how it's non-custodial in terms of like, the money stays in my Binance account or my Bybit. But do you see anywhere in your roadmap of being able to use this with decentralized exchanges so it can be fully like, just, using my MetaMask or like being completely self-custody and not having to trust a centralized exchange?
Anything? Yeah, there's a large crypto community that we're looking at onboarding with a couple of guys in America that live in Bali, and they've got a large community in the US, and they just don't want to be KYCing on exchanges, and it's become a bit of an issue for that clientele base. For whatever reason, they don't want to KYC. In the future, it's a balance between risk and reward. The problem is for us, if we go to those exchanges, they don't have enough liquidity, and you will see on trading charts occasionally a trade will be just going along nice, and there might be just a red candle for no reason, but it just dumps, or it might go the other way, but that's not really a problem. But you get these massive spikes in opposing direction, which will just liquidate accounts. It's being manipulated by somebody. It's definitely less so in the Binances and Bybits. Having your funds in that kind of account trading makes it vulnerable to those attacks. It's just not a risk we're prepared to take for our clients in this important time. If it changes in the future and their
Mm,
services better, it's just not worth the risk. You have somebody that's put a lot of their savings into this account. For whatever reason, the exchange creates a red candle and because they want to liquidate and buy something. It's like all of a sudden it's a massive issue for these clients. So
mm,
we're not, it's all about, as I mentioned earlier on in the recording, we identify the threats, we mitigate a method to prevent that from happening. We're mitigating that threat by just keeping it on the big exchanges and the higher trading pairs.
mm. And that led me into one of the other questions that I wanted to ask is, Yeah, quite often. So one of my fears of trading, right? This guy's like, go put 5 grand. He was obviously being very, very cocky. He's like, I can guarantee you go and put 5 grand and 5x leverage it. And you know, he was predicting that it was going to be 35K in like a month's time. But then he said you've got 20% opportunity for it to drop, right? To go the other way. But it's very common that we'll get in the crypto industry, 20 to 30% drops and then go like right back up because they're trying to um liquefy people. So I guess that's where your hedging kind of comes into place to kind of.
Exactly. Yeah. So in that scenario, I'm not sure if he would have explained this to you. If you were to put 5 grand in the account, you'd probably want to have in your account 15,000, maybe 20,000, and only spend five, because you need to keep liquidity into the account in case it does go into an unrealized position to balance out. But yeah, that's exactly right. We would be hedging in the opposing direction just to balance that trade in the wrong direction if required. But you need somebody to know what those key points of entry are, when to exit they are, and to manage that system. So somebody that's untrained, that's emotional and gets tired, it's not a good idea, really.
That's me. That's me. All right, I see some questions finally coming in. Adrian, you go first and then I'll read Martin's question. So Adrian, you can unmute yourself if you want.
Thanks. Can you hear me?
Yep.
Yeah, cool. It's it's funny in terms of I think about in terms of AI trading bots, and we think about the dead internet theory about bots on the internet. Do you perceive as the technology extends what you're doing, where you can have trading bots, everyone can have a trading bot, where you could essentially everybody could have a trading bot and they can be going about their daily lives like we have a chat bot or an AI bot that does other things for us like an executive PA, but everybody conceivably could have their own trading bot and it's just trading 24/7 on their behalf. Like everybody could have it, just automated. You just buy it as a service. Where do you see this
Yeah, you
kind of
can.
going in
And
the
there's
future?
Yeah, you could. There is lots of technology out there where you can just subscribe to a service, but the thing is, a lot of these bots, it's a simple algorithm which will just sit on a cloud-based server, which may DCA down on the way down, and it works quite well for a little bit when the market's going up. But when you start doubling your position size every time you lose, the bot blows up very, very quick. Seen it so many times before. Companies come on board, you just rent their program, they liquidate everybody, they disappear, they rebrand, and they reappear. Now, saying that, in the future, if you just think about it practically, yeah, there could be some machine learning technology which will be a better solution, and it's highly likely. However, the amount of technology and time that's gone into what we've done with having our own exchange servers, the security, the AI learning, which took years to complete, and come up with the data with the human element coming in, to that be just reduced on an individual level, one by one, especially in the near future, is extremely unlikely. Saying in the future what our trading solutions, it's the space just changes so fast, and whatever we think with our human brains right now is probably completely wrong for what we're going to be looking at in the next 3 5 years in this space anyway. Anything's possible, but yeah, ideally one day there would be a solution that everyone can just use, but the limitations we've got with current systems, it's just, yeah, the technology is not quite there yet.
Do you think, just as a one more, and then I'll back out or whatever, in terms of we have savings accounts with banks and they earn interest and various interest rates. You put money in and you earn various interest rates. But over time, with like a trading bot, could something like that as it matures actually take the place of savings accounts? Like you place money into an account, you place certain rules and algorithms on the behavior of that deposited amount, and it almost takes the place of a savings account, takes the place of a bank. The service
Absolutely, Adrian.
paying you
That's
3%,
exactly,
2% interest.
and that's almost exactly what we're doing now. Because if you think about it, if you've got, I don't know, $100,000 and you put it in the bank and you get 5 or 6% with some banks over a year, what the bank does and goes with your money is it it just doesn't sit there. They take your 100K and they go off and make a lot of money with it, but they pay you such a small reward. It's a very archaic type of financial system, and that's what we're really stepping away from. So a lot of our clients, it's exactly what this is. So if you think of your exchange account as a savings account, you're deploying whatever funds you have available into it rather than sitting in a bank account. They're sitting on the exchange. The AI is trading for you. At the end of the month, you get an invoice for the money you've made. You can either leave that money in there to compound, or you can just take it out and use it for expenses to save up for property, buy other assets, use it on traditional marketplaces for trading. It's a cash flow mechanism, so much stronger. So as an example, our AI Wealth Pro, after fees for our clients for the last 2 years, has done a 300% return. Every single month, if we're averaging 24% annual return, average month after fees, they're doing 300%. So if you start to think about that as a savings account that can produce those kind of fees in an account which you hold your money in, it really changes the mindset of the traditional banking system. And as long as you're smart about your strategy, and everyone's got a different risk profile, they're at a different age, they're at different diversification levels, and their appetite might be slightly different. Some people might let it just compound for 6 months, take bigger chunks. Some people might let it run for 1 month or 3 months, take that out to fund other things in their life. But it's just a mindset of, is this, as opposed to having a traditional banking account where you're getting nothing really because they take their fees out as well, or you just have it sitting on a platform like this that generate more for you.
Mm. All right, well, we've got a couple more questions, and this one was actually about fees. So in sideways markets, say before January 2024, do your fees and the exchange fees make it a zero-sum game? Or to put it another way, what techniques do you use or AI use to return a significant value to the investors in these quiet sideways markets? And what about a downward market, all leveraged shorts? Question mark.
Yeah. So with our fees, there are no client agreement fees. There's no contracts. There's no holding fees or anything like that. Our business only makes money when our clients make money. So at the end of the month, you'll get an invoice depending on how much you made, and a percentage of that profit comes back to us. If our clients don't make money, we don't make money. And that's a really bad business model. So our clients have to make money. That's the first thing. Now, in a sideways market, we can still make money for our clients. The weakest month that we've seen in 2 years was 9%, and that was in a sideways market. There was only one of those months. We've seen a 12% month, so it can still be doing it. It's just looking for, in a sideways market, when we're kind of just ranging across, we're just looking for dips and slight gains, just because there is still a bit of volatility in the market. We can also make money if we're in a trade and there's hedging on in a sideways market, because we start to close hedges off before they're back to neutral, little chunks of cash flow there as well. In a bull market, obviously the overall trend is long. At the end of any bull runs, we can trade. It doesn't matter which way we trade, we can go the other way as well, as long as the data and the analytics say that we're going to start going short and that's our trade position. We can make just as much money going the other way as up.
Okay, cool. The next question from Ray: do you nominate the percentage of your portfolio to be used for trading via money value or percentage setting somewhere?
It's a percentage setting which is set up, which is allocated by the AI depending on its trade position it's about to enter, how sure it is. Maximum trade entry will be 30%, and it can go as low as 10%. So if you've got $100 in your account, maximum trade entry will be $30, minimum will be $10. The reason we do that is we allocate another 20% to hedging. So in worst case scenario, if we took a 30% maximum trade, there's another $20 for hedging if required, which takes it to 50. That hedging almost takes the liquidation price to zero, coupled with the 50% remaining in the account for liquidity, is all we need now just to buy time. And as I mentioned before, because the fees are so low, we just ride the market through hedging up and down and entering. If a hedge closes off, we'll make money, then we can enter hedges again, or we're just buying time until our overall primary position is closed at a profit.
Okay, cool. And then you said something earlier, like everyone is, at different stages, has different amount of money, has different risk appetites, as different kind of goals. If somebody if somebody is interested in using your product, do you guys offer, any type of like kind of strategy session? Like, say somebody like me that's not really a trader and I'm kind of like, okay, I don't really know. Okay, maybe I've got this much, what would I be comfortable with? Because like I'm kind of like I have this fear of losing money, and all this sort of stuff. So like how do you guys help maybe people? I know that some of the people like on the call, maybe have more experience with trading and they kind of know what they're comfortable. But what about new people that aren't and they want to kind of tap into this space? What does that journey look like for them?
On our white paper roadmap for 2025, it is programmed for an education syllabus to be entering the AI Wealth program. But until then, the platform's really designed to be completely hands off. It's more designed for people that can look at what we're doing and are happy with those type of returns for a hands off approach. On a Zoom onboarding call, there's time and opportunity for them to ask lots of questions and either via emailing support or in a Zoom session. But once they're set up, it's really designed that they don't have to know anything. They're just got to be open to the risk of trading in crypto and how we're mitigating any threats we've seen and looking at our prior performance for 2 years and seeing whether that matches with what their beliefs and ideas of what they want to do are. If it is, they can jump on board.
Okay, cool. Well, last opportunity for anybody to ask any questions because we'll wrap it up in a moment. But one of the things I personally really liked, and when I met Lisa in Dubai, is that it is self custody, and you don't make money unless we make money, and I just I feel more comfortable. If it were for me personally, that would be like a type of if I was ever to kind of go down that route and kind of invest in like a AI trading platform. Now, you just mentioned like an onboard process. So like hypothetically somebody's like, "Hey, I want to learn more. I want to potentially see what it takes to like create an account." What is the next steps? Like how if anybody is watching the recording or anybody's on this call is interested in getting a bit more information and seeing if it's something Martin's just asked if your white paper is on your website.
No, but if you email us, we can send it out. We are just rebranding in Dubai at the moment with a new design company and a new website, which will be live probably the next 2 months. We'll have the white paper on it.
Okay. But yeah, so how would somebody, what would be that next steps or what is that, if somebody's like, "Hey, I want to learn," you said they jump on a Zoom call or like, what does that process look like?
Yeah, they can either go to our Instagram account or just email us directly, which is support@aiwealthpro.ai. Ask for a Calendly link, and they can just book in a call.
Okay, perfect. And so they can probably get that email address also on your website and then just,
Yeah, absolutely. Yeah. So we're just going through a rebranding phase at this stage with a company in Dubai. The new branding website will be up within the next 2 months, which will have all those links and information. The current website does have the email on there. It's just a very generic website. We've grown so fast that it hasn't really been required, but the time has come now where we've just got to bring it up to speed with the rest of our operation.
yeah, perfect. Well, I definitely learned a lot. I hope everybody else learned because me and trading, it's all new, but I have been thinking about ways that I can, increase my portfolio, especially in this bull market that we seem to be entering. Oh, I think somebody else maybe have just raised their hand. Yeah, go ahead, Ross. Got in just in time.
Yeah, hi. Hi, yeah. Thanks very much for the information, Mark. Listen, I'm fairly new to the space and I'm just sort of understanding, what's going on really, and I was trying to anyway. But I'm just very interested in the sort of big picture thing, like Dubai seems to be the place to be at the moment with all this crypto stuff going on. And probably two parts to my question is, what makes Dubai so attractive for people setting up crypto tech type companies, such as yourself. I'm also interested in, obviously, Trump's made a big statement recently. We're going to be number one in crypto. We're going to we're going to take over that mantle from whoever's got there, possibly, Dubai, UAE, whatever. So I'm just wondering, second part of the question is that realistic, that sort of an idea, and what sort of thing would he likely do to try and become that place?
Good questions, Ross. First one, why Dubai? Simple answer, no tax.
Yeah.
Second question, Donald Trump, what he's going to do is he's made it kind of, he's acknowledged that there'll be no tax for American citizens on crypto gains. In the future, there's lots of limitations and restrictions on Canadians and US actually, with what they can do with crypto exchanges that they can trade on. All that stuff is going to get cleaned up in his office coming in, but the big one is changing the tax rulings around it. So any capital gains, like example, if they bought Bitcoin today at 98,600, and when it goes to 300,000, because I'm pretty certain it will with time, that delta they won't be paying tax on. So that's kind of his stance of changing things like that in such a large population, and he's already had 4 years in office, and anything he's a businessman. He's not a politician, and that's the big difference. He has good ideas, good concepts, whether you like him or you don't. He's good at business, and that's what he's in there to do, and that's what he will turn around. So it really will strengthen that crypto space in that US market.
Yeah, thank you. Thanks for that.
Yeah,
No
and
problem.
I'll piggyback off of that just to wrap it up. I'm interested. So, from my understanding, there's no tax for individuals, but if you open up a company, I believe it's a 9% tax.
Yeah,
Up,
yeah.
I think, but if you make over of 100,000, I think if I can't remember exactly, but
What,
my
personal?
sorry.
Are you saying for personal in Dubai, or is
No, in
company
Dubai
for?
as a company, like did
Oh yeah,
when
minimum margins are 100, then it kicks into like 9%. Yeah.
yeah, as a company. I
Yeah.
heard that he's also talking about, so if anybody doesn't know, in America, they really get the shit end of the stick that even if they say move to Dubai, like that's why it's not a huge incentive for Americans to move to Dubai because they still have to pay tax in America. That doesn't happen. So like if I leave Australia or can like I haven't been in Canada for 10 years, I don't pay tax there. And apparently he's also going to remove that. So, but then there is, people are saying that that could actually have a positive impact for the UAE because then not only could businesses move their businesses over there and not being having to pay tax in America. So I think it will be an interesting space to watch on some of the moves that he makes and how that will impact the overall market.
Agree. Yeah.
Well, thank you so much, Mark, for your time. Yeah, anybody's interested, I will send out the recording. Reach out to Mark or Lisa from AI Wealth Pro, and they can help you. And I look forward to catching up in Dubai. I'll be there for the whole month of December. So,
Perfect. Thanks for the opportunity.
all right. Thank you, everyone. Have a good night.
Thank you. Bye.